Okay, we are live. Hi guys, good afternoon. Ijoma, over to you.
Month learning experience running from August to December. And throughout this series, we've been breaking down the legal buzzwords, frameworks, documents, and obligations that every tech founder, operator, and builder must understand. And my name is Ijoma SK, a graduate intern at Year-End Legal, and I'm delighted to serve as your moderator for this important conversation. And with me today is our host, Barrister Norma Grace, a corporate and tech lawyer. And also joining us as our special guest speaker is Barrister OSITA James, an experienced legal practitioner whose work spans across corporate advisory, regulatory compliance, and strategic risk management. And today's webinar continues our mission of simplifying complex legal issues and giving business leaders the clarity they need to stay compliant, protected, and strategically positioned. We understand that many people run businesses, scale products, and manage operations daily, but very few get the chance to step back and examine the legal foundations that hold everything together. And that's why I'm especially excited for today's discussion. As we approach the end of the year, the legal side of business becomes even more important. Renewals, compliance checks, contract reviews, internal documentation, tax obligations, and risk assessments. These are the details that determine whether a business steps into the new year prepared or blindsided. So over the next few minutes, we'll be breaking down the key elements of a year-end legal audit, helping you understand what to review, what to update, where businesses typically make mistakes, and how to enter 2025 legally protected and operationally aligned. So whether you're a founder or an operator or a lawyer or a project lead or simply someone who wants to tighten up on the legal side of their work, this session is for you. And I'll briefly just give an intro before I hand over to Barrister Noah. So basically, as the year draws to a close, many businesses focus on closing sales, reviewing budget, planning teams, and setting targets for the new year. But one essential activity that often gets overlooked, yet determines whether a business enters the new year protected or exposed, is the year-end legal audit. And basically, year-end legal audit is more than a compliance exercise. It's a strategic review of your business's legal structure and documentation framework to ensure that nothing slows you down and you step into 2026. It helps you identify silent risks, outdated agreements, looming expirations, and potential non-compliance issues that could affect funding, operations, partnerships, or even regulatory standing in the long run. And it's your business's strategic health check, basically, a chance to pause and make sure everything is running right, and make sure nothing is outdated, expiring, or quietly putting your business at risk. So because this is the truth, because laws change, regulations shift, contracts expire, and businesses evolve faster than the documents that even guide them. So many companies continue operating with agreements, policies, and structures that no longer match the current reality until something goes wrong, probably a penalty or a dispute or a lost partnership or a misrenewal, and at that point, damage is already made. That's why this kind of audit is essential, because it helps you, first of all, catch the issues early. Then secondly, it also helps you to stay compliant, especially if you're in a regulated sector. Thirdly, it prepares for opportunities, investment expansions, new partnerships, and then it strengthens your documentation and your governance. So today, we'll be walking you through 5 key pillars that every business should pay attention to before the year end. The first one is contract and compliance health check. Second one is renewal and expirations and risk gaps. The third one is financial and legal readiness for 2026. The fourth one is updating policies and internal documentations. And the fifth one is your 2026 legal game plan. So these are the 5 pillars. These 5 pillars will give you a clear and holistic view of your business's legal health and help you identify areas that need immediate attention. And today we'll be having a guest with us, and would be having a very, very, very amazing time. And by the end of today's session, you would have a simple, and actionable understanding of how to run a proper legal year-end audit and how to position yourself and your business for a risk-free, goal-oriented 2026. Thank you very much. And can we just welcome Barrister Norma on stage?
Thank you so much for that brief introduction, Ijoma. I'm not going to do much. My job here is to announce and introduce our special guest today, which is Barrister OSITA James. OSITA James is a distinguished Nigerian lawyer and technology entrepreneur with an impressive footprint in the African startup ecosystem. He is a partner at Black Crest Law, one of the leading startup-focused law firms supporting innovators, founders, and high-growth businesses across the continent. Beyond legal practice, OSITA is also the founder of the Flourish Opportunities Network, Africa's largest scholarship support social enterprise, currently serving over 10,000 members across 5 African countries. His work in this space has made global education more accessible for thousands of young Africans. OSITA is also a Chevening scholar, as if all his other achievements were not enough, and he holds a master's degree in innovation management and entrepreneurship from the Nottingham Business School. He also has a diploma in technology and management from the Nigerian University of Technology and Management, strengthening his unique blend of legal, managerial, and innovation-focused expertise. In addition to his professional work, OSITA serves as a startup legal operations mentor with Because International, a non-profit organization that runs a biannual accelerator for startups across Africa. Through this role, he provides strategic guidance to emerging founders and supports early-stage ventures in navigating legal and operational challenges. We are so honored to have him with us today, and we are super excited to learn from his experience at the intersection of law, technology, innovation, and social impact. So please sit tight, buckle up, and let's bring out our notepads because OSITA is about to drop wisdom on us. Thank you so much. OSITA, over to you.
Yeah, thank you very much, Norma, for that. I think I'm going to try and present. Am I allowed to do that, Norma?
Yes, please. Yes, please go ahead.
Okay, just a second. Let me download it as PDF.
Okay, no problem.
But while I'm doing that, can you like just say something about why a legal audit is so important? Because since that's what the topic is about, so why is a legal audit so important? Like, why
Well,
should business owners care?
a legal audit is very, very important for various reasons. The first one is just so that you can see how well your business is doing legally and whether you need to tighten any loose screws or whether you need to do anything or whether you need to pivot or whether you need to, improve your risk management or anything like that. It also helps you clean house, really. Because now, once you have an audit, you're able to know number one, what compliance requirements do I need? Which ones have expired? Which ones do I need to renew? You're also able to, have an overview of all the contracts that you had throughout the year, especially in a time like December, which is generally a time of celebration and reflection. So it helps you not only to clean up your business legally, but to clean up the partnerships and the contracts and the agreements and policies that you had both internally as a company and with third parties, whether they be customers or whether they be vendors for whatever reason or even staff, right? It helps you clean up all of these loose ends so that you're going into the next legal year or into the next financial year, for if that's the term you're more familiar with, so that you're going into the new year prepared to take on the new year, having the full knowledge of number one, all the things that you need to get, all the things that you need to keep aside. If you need to pay, all the extra things that really you need to do, you're going in with the full knowledge of all of these things, and you're more prepared to take on the new year, so that it's not when you get to the new year now you're asking questions and you're wondering, oh wait, we're supposed to have gotten this license but I didn't remember, and now the deadline is ticking at my door and everybody's scrambling and rushing. A legal audit helps you avoid all that. It also helps you plan your risk mitigation and management systems should you have one. It helps you renew your insurance if you have one, which every Nigerian business should, right? It helps you do all these things that generally prepare you for the coming year. So these are just some of the reasons why you need a legal audit.
All right. Thank you so much.
Oh,
You spoke so well. Are you sure you're not the one that's supposed to be the guest here? So that all of
no,
us
no,
can go and
no.
rest.
Ah!
Hi, everybody. So it's a Friday. I know that we're probably tired because I myself I've also been at work all day, but the work has to be done, right? So thank you so much for inviting me. I've put together a small presentation that will sort of guide the conversation around what business owners should be thinking about when they're preparing for their end of the year legal audit. So just like Norma has said, it does make sense that at the end of the year, as you're auditing your finances, okay, did we hit our target, our KPI? How much were we able to make? Which big clients were we able to close? That those are not the only metrics that matter. And I think the government stance on compliance is a clear indication that if prior to now you are likely just going to ignore compliance, you can no longer do that. A very good case on point is something that happened recently. We had one of our colleagues post on LinkedIn about a client that went to do his annual return, and he now saw 51 million naira as his fees. And he was so confused. He came to ask the other lawyer, like, what's going on here? Like, why is CAC saying I'm owing 51 million naira? And apparently, he did not know that CAC calculates it every day, every single day that you don't pay. And he has not paid it for a very long time. So if you multiply the number of days by that amount, so that's what comes up overall to that figure. And if you now calculate it over a number of years, so just like I was emphasizing, in case you didn't think compliance was important, the government stance on compliance these days is like a very good incentive to start to go back to the drawing board. So what is an audit? An audit is essentially a systematic review to ensure that your business follows the right laws, regulation, and industry standards. So that's essentially what an audit is about. And for this conversation, we're going to be focusing on your legal audit, because we are well aware that you already do your business audits where you check for clients, where you check for revenue, where you check for leakages, things of that nature. But a lot of people don't always check what might be missing in compliance, or potentially what could even help them secure more of their business interests. So in the course of this conversation, we'll see all of that. So why does it matter? Okay, I've already talked about that, the government stance, right? So there are several reasons why your legal compliance audit is so important. The first one is trying to mitigate risk. If that chap that was fined 50 million plus for not filing his annual return on time, if he was aware of what the implications would be, he would not have allowed it to stay that long. And guess what? I think the annual return doesn't cost much. That's your official fees. It doesn't actually cost much. It's less than 50,000, right? And it's annually. But because he probably did not prioritize it, so it now created a business risk, because now he's now asking how much is he making in the business? How would he pay 51 million? Like, how much is he making in the business? So it will now force him to either pay the money or ignore it, and they will strike it off. But guess what? The new government stance is that even the director that is in a company that's been struck off the record, if they are owing that annual return, the CAC can still come after them. It's very interesting. The CAC can still come after you. So don't think that, oh, even if I don't pay it, I'll just go and open another company. You want to become a serial corporatepreneur, opening companies every other day because you don't want to pay annual returns. What the government stance is that they are going to come after you if they feel like it. So you're better off just actually planning towards this to avoid that type of risk to your business. So the next one is operational efficiency. When you think around your IP protection, your data protection, it actually helps you to be more efficient from an operational standpoint. When you have contracts that ensure that your trade secrets are protected, when you have policies around things like the use of AI, you have policies on the engagement of external vendors or external contractors, it just makes it very easy for you to work in your organization, because if something comes up, there's already a policy for it, right? If there's a new vendor you want to engage, there's already a contract, a standard contract that your company uses, that you use to engage people of that nature. So it's just something that helps with enabling more operational efficiency, as well as building trust, between yourself and the stakeholders that work with your organization. So that's something that we have to bear in mind as business owners. Then the next one is investor and stakeholder confidence. If your corporate governance is well structured, you have an actual board, you've constituted a board, not like you just have a group of people that meet whenever they feel like or whenever it's time to share money. But I'm talking about a board that votes on decisions. There are resolutions passed. These resolutions are documented, and in the appropriate cases, these resolutions are sent to the Corporate Affairs Commission for filing. You change your address, you file it, right? You change your name, you file it. You change a director, you file it. So, like the idea is that when you have this type of things in place, the investors that want to invest, they are confident that you will continue to maintain that level of standard, that they know what's going on in the organization. It's not like they're asking you, yourself, you don't know. The other director, he doesn't know. Who was the last, like, what would you say is the position of the people that are working as vendors? And they're asking if anybody knows, if any of them have a relationship with any of the directors. You don't know. The other director does not know. The secretary does not know. So when you are confused, it doesn't inspire confidence. It really does not, right? So that's why these things are important. That's actually why some of these things are very, very important. Then the last one is proactive decision making. Proactive decision making. When you proactively follow up with your compliance, what happens is that if there's a new business opportunity that you want to take on, because you already have processes in place, you can simply just say, oh yeah, let's just create a resolution, agree that we want to do it. Then we can go and meet this bank and ask for a facility of 20 million. And then we can show them our books. I think the accountant said the books are up to date. So it's easy when you are compliant. Oh, our annual returns are up to date. We don't have any record of owing government any taxes. So it just makes it very easy, because you're proactive. So it allows you to do things faster. It allows you to do things faster. So if you're a business owner out there and you're listening, please know that when you do your legal compliance audit regularly, not once in a while, right? Because a lot of people only come to lawyers or compliance experts when there's a problem. Please do not come only when there's a problem. Please reach out even before you have a problem, so that you can be proactive. That way, when the opportunity comes up, you're not now running around and trying to fix something in 1 week that you should have been doing over the last 3 years. So we're going to cover some of the things you should bear in mind for an end of the year legal audit, right? So just follow me along as I take each and every one of the topics one after the other. So the first one I want to talk about is post-incorporation matters. So everything you do after you register the company that relates to the business administration side of it is all categorized under post-incorporation matters, because pre-incorporation is like some of the agreements that you had with the initial partners, maybe some assets that you acquired. So those ones are pre-incorporation. And then when you then register the company, that process is called incorporation. So all the other obligations after that now fall under the category of post-incorporation. I do not want to assume that everybody knows what that means. So that's why it took some time to explain. So after 18 months of incorporating the business, you automatically start having the obligation to file annual returns. If you just registered your own, it's fine. But just note that from the day you registered it, you count 18 months. Once it is 18 months, you then have an obligation to file annual returns to the Corporate Affairs Commission. And now, when you have an obligation to file annual returns to the Corporate Affairs Commission, what that really means in practice is that once that period comes, you're meant to file a number of documents showing them the state of affairs of your business. I think there are also some relevant forms that you fill for that. Sometimes they ask for a statement of account and things like that, just so that they have a sense of how the business is doing. Now, apart from the annual returns that is part of the post-incorporation matters, you also have issues like things that happen on a day-to-day basis. Maybe you've changed a director in your company. Maybe you've changed the address of the company. Maybe you used to be in Ikeja and you've now moved to Yaba, or you've moved to Lekki, right? So once you've changed that address, remember, I don't think a lot of people pay attention to this, but when you represent your RC number on a letterhead, right, what you're essentially saying is that the people that sent this communication is this company that is registered under Nigerian laws. That's essentially what you project every single time that you send out a document of that nature, right? So you're representing that communication to come from that company. And when you use a name that is not exactly the registered name, it is actually misrepresentation, and it's a criminal offense under the law. It's a criminal offense. So while using a wrong address may not necessarily be a criminal offense, it might still amount to a level of misrepresentation, because you're no longer where you said you are. You've moved to somewhere else, but you continue to represent as though you are in that other place. And remember that official communication from your company, your letterhead that you send out to clients, including government agencies, right? When you say we are here and you are not there, and maybe the people you're communicating to are people like maybe the FROS or the Lagos Inland Revenue Service, for example, what you're essentially saying or trying to do, how they will at least interpret it, is that you're trying to mislead them so that you will not be held accountable for your legal obligation. That could be seen as evading taxes, or whatever the particular legal obligation you might have would be. And you can be fined for something like that, or at least face some civil consequences. So it's very important that once you've been incorporated, all the other things that you're trying to do, especially the ones that require you to do filing, that once you do it, file. Once you do it, do the filing, just so that there's a record, that this was done properly. And when you've done the filing, don't stop there, document it properly. Because some people, it's always surprising when you meet people that have been doing business for years and you're like, oh yeah, we are looking for this document. I mean, when you guys started, you probably had a resolution to create a bank account and you don't know where it is. They don't know where it is. They don't remember where the email is, right? So I think that, as business owners that really want to scale, it behoves of us to keep proper records so that things are easier for our organizations going forward. Now, regarding what I was saying earlier about the guy that was fined by CAC for not filing his annual return on time. So this is like a table that just sort of represents the fee for the default or the fine for the default, right? So private companies is 5,000 naira a year, and then 500 every single day for the default. So let me just use my calculator real quick so that I can give a bit of perspective on how it is possible that someone can owe 51 million. So 500 naira, there are 365 days in a year, times 365, that's 182,500, right? So, and then they said for each of the director and each of the secretary. So assuming that let's say there are 5 or 6 directors, right? So let's multiply that by 5. That's already 1 million, right? So multiply that by 5, that gives you 1 million. You've not added the secretary. Now, depending on how many people are directors in that company, what that would mean eventually is that by the time they keep calculating it and calculating it and calculating it, before you know it, it's running into millions and millions of naira. It's running into millions and millions of naira. So please, let's be well guided. Let's not assume that it's not a lot of money that we can pay it later when the company has more money. You might be very unlucky and you end up paying up to 5 or 10 million for something that you could have just simply done at the time you were supposed to do it. One of the reasons why Grace has put together this session is so that people will also be aware of what they should not do, so that they can save their business from the consequences of not doing those things. So the second thing I want us to look at is permits and licenses. So I need to know that your company is supposed to ensure that all the relevant license and permits for your respective industry, that you actually go ahead to ensure that you get it. You're not supposed to leave it and hope that they will not find out that you're operating without the license, because operating without the license can bring you heavy fines. I mean, a case on point is what happened to Paystack with their Zap Pay. They were fined, I think, over 200 million. They were fined over 200 million for they said they did not have the relevant license to run that particular product, that their license did not cover that particular product. That their license didn't cover that particular product. Yeah, it was 250 million naira. I just confirmed 250 million naira. So, and again, I mean, some of you will say it's Paystack, so they find them because they probably felt they have money. You're very wrong, sir. Sir, you are very wrong. It will not matter that you are not as big as Paystack. If the CBN finds you wanting, they will fine you. They will fine you, and they will fine you heavily. They will fine you very heavily. Very heavily. You're better off not attempting than attempting and finding out what exactly the regulators are going to do. So these are just some examples of some license that you should have if you're operating in some of these industries. For restaurants, you need to get a license from NAFDAC. For fintechs, there's CBN, there's Federal Competition and Consumer Protection Commission, and then there's SEC. So the SEC license is for people dealing in the virtual asset service providers, like crypto, NFTs, and things of that nature. While CBN is generally banking licenses and so on, right? The FCCPC deals with digital lending. They have a digital lending guideline and a license that people should also apply for, as it were. So for courier and logistics, you have the logistic license from NIPOST that is in categories. There's a national, there's regional, and there's international license, depending on the one you're trying to apply for or your area of operation, like where you hope that your riders will be able to operate from. So it all depends. And this list is not exhaustive, by the way. They're licensing in different industry. Depends on the one that you're currently playing in. So my advice would be, as part of the end of the year legal audit, okay, sit together, huddle together with your team members. This industry we've been playing in, is there even any license that we're supposed to get? If it's a fintech, is there any license we're supposed to be exploring? If it's an agri-tech, is there any license that we're supposed to have? If we want to give our loans to farmers, for example, is there any license we're supposed to have? So I think these are critical questions that you should be asking, because it helps you start to think around how you can truly ensure that your business is compliant and that you're well positioned for success. So that's one of the ways to really think about it at the end of the day, right? And then there's a tax bit. Apart from licenses, we've talked about we initially talked about post-incorporation matters. So we've talked about permits and licenses, and now we're talking about taxation. So one thing that you should know is that every company in Nigeria is liable to pay taxes under certain conditions. Under certain conditions. Why I said every company is because some people are now being misled that, oh yeah, the new tax regime is that companies that are small are not supposed to pay tax. That is not correct, sir. That is not correct. They are not supposed to pay company income tax. That is only one aspect of the list of tax laws that we have in Nigeria. That's only one, sir. Only one. So there's a VAT, which you're not necessarily the one paying, but you have to collect it so that you can remit to the federal government. There's a withholding tax that you're supposed to collect when you deal with consultants, people like that, like external, independent contractors and consultants. You're supposed to withhold a percentage of the money so that you can deduct and send to the government. So you're supposed to deduct and send to the federal government, right? And then there is the NSITF, which is 1%. Everybody is liable to pay that tax. Everybody is liable to pay. The education tax is on profit. So if your business does not make profit, you're not liable to pay the education tax because it's on profit, right? But the Company Income Tax Act is now only applicable if your company does not fall within the threshold of the small company. So what is a small company? A small company is a company that is 100 million naira in annual turnover and not more than 250 million in all the assets combined, in combined assets. So that's what is defined as a small company. So it means that if you're doing over 100 million every year, you are liable to pay Company Income Tax Act. You're liable to pay Company Income Tax Act. But even if you are not liable to pay Company Income Tax Act, you're still liable to pay education tax, NSITF, that's Nigerian Social Insurance Trust Fund. And then you're also liable to pay what the federal government calls the development levy. So it was a bunch of different small taxes before. So they've put it together and the rate is 4%. So there are different taxes that you're liable to pay. And one of the things that I implore you to do as part of your end of the year legal audit is to huddle together with your team members. We've been doing this business. So we did 200 million this year in annual turnover. Which taxes are we even liable to be paid? We don't want any problem. So, okay, if your team members don't know, you can then invite a lawyer. Okay, let's pay you consultation fee. Come and speak to us for an hour and explain to us, based on our current company profile, the taxes that we're liable to pay. And if you don't have time for a call, you can ask a law firm or a tax consultant to send you a memo, like a 2-3 page memo on the taxes you are liable to pay, just so that you don't get into trouble, because the government is very, very, very bullish about taxation. Extremely bullish. From next year in 2026, is people that are running after the lawyers and tax consultants. It's not the lawyers that are running after them, because the government is very bullish about taxes, extremely bullish. So that means that whoever wants to succeed is going to be someone that is proactive about thinking about finding out the taxes that they are liable to and figuring out how to be compliant with respect to paying their requisite tax obligations. And we are seeing a scenario where there are some things you'll not be able to do unless you have a tax clearance certificate. So if that was not very rampant before, that is about to become even more rampant from 2026. So, like I said, this session is about what are the ways that you can do a very effective end of the year legal audit, and thinking around your tax obligations, from 2026 going forward. It's a very good way to do that. So I explained this already. Small company classification. If it's 100 million in annual turnover and below 250 million in fixed assets, that's your combined asset, then they're exempt from company income tax, even capital gains tax as well. And then the new development levy of 4%. But once you're doing above this 100 million in annual turnover, annual gross turnover, you're automatically liable to all these taxes. So it follows the principle of the progressive the progressive tax regime, where you tax people that have more, and tax people that have less. So that's sort of like the government stance, is a progressive tax regime. So for corporate governance, which is also another aspect that you should look into, is another aspect of the end of the year legal audit that you should actually be really paying attention to. So corporate governance is about figuring out how to keep your organization accountable, transparent, sustainable, and compliant. Those are like some of the major themes. Accountability. Under the corporate governance code, you see things like, that you should have a reporting standard for your accounting, that you should disclose the current state of affairs of the business to the stakeholders at a regular basis, which would be quarterly or every 6 months. But the idea is just the idea of accountability, transparency, things that help to build stronger stakeholder trust in your company. That's what corporate governance is really about and what it's concerned with. So as a business owner, some of the ways that you should be thinking about corporate governance is that in this your end of the year legal audit, something that I'm hoping that you will sit down, even if it's just a day or two, and speak with your team members, is that you should be thinking about your board composition. Is my board composed in a way that creates distrust or creates an assumption that there might be collusion against the interest of the business? What do I mean by that? If there are members of a board of a company that is not just a family business, that other people are also a part of, and that board is largely constituted by family members, naturally, the tendency to collude and not protect the interest of the tendency to collude and not protect the interests of the other stakeholders is higher. It's significantly higher, right? So this is something that you should look into. It doesn't mean that, you should remove all your family members. No, it just means that, can we constitute the board in a way that makes us look like, not just make us look, that makes us more accountable to our stakeholders? I think that's a better way I'm going to put it. Can we constitute a board that can be trusted, a board that will be seen as credible by our stakeholders? Who are your stakeholders? Your shareholders, the communities that you engage in, the states that you operate in, even your investors. Like, all these people, they are all part of stakeholders, right? They're all stakeholders because they have a benefit or an interest to protect in what you're building. So corporate governance is about trying to reduce your business risk profile and to make your business administration more effective. So let's say you are getting older, or maybe you're considering going to do something else. Is there a process for succession in your business? Is somebody else able to take up the responsibility easily? These are the things you should be thinking about in your legal audit at the end of this year. Is our organization currently structured in a way that allows the business to remain a going concern, even if something happens to me or any other member of the board? So you need to think about these things deeply and reflect on it. These are like some steps that I think you can take to start to coordinate corporate governance for your organization. Number one, I think you should review your board composition to see if it aligns with global best practices. There's a corporate governance code of 2019, and there's also there's one that was created, like a guideline that was created by the Financial Reporting Council of Nigeria for SMEs. So it's also useful to just have a look and see some of the areas that you can really improve on for your organization. So setting up a formal board, if you don't have one, is also very key. Maybe you've just been doing the business. We just did that deal, we just made money. But at a certain point, you can no longer just do the business like that. Let's say you have up to 10 employees. You can't be running the business on your whims, how you feel like. It's not going to work. You understand? It's really not going to work. So you need to consider setting up a formal board so that board will help to coordinate the affairs of the company. If you're trying to set it up, you can always ask a lawyer to look at it and help you figure out how to improve on what you're trying to create. Okay, then send out documents regarding ownership structure. Some people have been running business together for years, and there's no document that says that you're a shareholder and this is your shareholding. This might be the period to start considering that. Are we able to attract serious investors if the current investors we have, there's no documentation of how much they invested and what their stake is? So we need to start looking inward to really tell ourselves the honest truth about whether what we're doing aligns with global best practices. What are the obligations? Maybe some of the shareholders have further obligations. It's only a formal document that can say that. Maybe there's another shareholder that is not even a director that has a significant interest. Maybe he has up to 10% of the business, but there is no formal documentation. So you going on to go take a loan, they might not start asking questions about who are the other shareholders, what do they do, because maybe they want to do their own due diligence. And then you find out that you don't have all the details. So that's why these things are so important. Even among your directors, you're supposed to create a standard where there's a background check on anybody that you want to invite as a director. There's a background check so that such a person will not go ahead and have a criminal activity and use the proceeds of that crime to finance your business. Because if they do that and they start what is called forfeiture proceedings under the criminal code, what you will find is that you might end up having all your assets frozen pending the investigation of the criminal issue. So please, let's be well guided. Corporate governance is very key. So start documenting key decisions with resolutions. A resolution is a formal document that contains the company's letterhead, what the resolution is about, the company, some of the company details, what the resolutions that were made, and then the signatures of the director and secretary of the organization. That's just what the resolution is. So you see things like that. Mr. Okeke Okafor is hereby appointed as a director. One line is a resolution. Then you place it in the proper formal format, right? And sometimes when you make a resolution like that, it might require you to go do a filing. What a lot of organizations do is that they just have like a law firm as a company secretary. So that law firm just does all these filings and all that for them. That's what they do for company secretarial services, right? So if you don't have someone internal that knows how to do all of this and that can also advise, offer legal advice on some of the issues that may come up, you might consider getting an external organization like a law firm, to help to handle things like that going forward for your organization. So the next one is data compliance, data protection. Data protection is like one of the most trending compliance issues in Africa, not just Nigeria, in Africa as a whole. And one of the reasons data is becoming a very significant concern is because of the advent of generative AI. So because generative AI leverages data from all over the place, so issues of personal data, safety of personal data and all of that is becoming more and more of a global concern. It's not just in Nigeria. I promise you, it's not just a Nigerian concern. It's a global concern. And there's also a lot of scamming going on. Banks have lost billions of naira to scammers. You have different types of fraudulent activities that go on that displace, significant sums of money from different platforms, right? So what these laws and regulations under data protection are really trying to do is, one, to ensure the safety of personal data, and then two is to protect financial data, protect health data, and other forms of identifying data and sensitive data that belong to people, right? So your organization, in trying to both be in global best practices as well as align with current regulatory dispensation, you're supposed to ensure that your company is data protection compliant. Maybe you're building a company that processes up to 1,000 data subjects on a weekly basis, on a monthly basis, depending on what type of business you're doing. It behoves on you to ensure that you actually have a data protection framework, that you have a data protection framework. It also behoves on you that you have people that are classified as your data protection officers, who, when an issue of breach has come up, they are the first point of call, and they actively monitor the systems to ensure that the breach does not happen. Now, the Nigerian Data Protection Agency requires you to send a notification to them if there's a breach within 72 hours of the breach. And beyond that, not doing a data audit as at the time you're meant to do it can give you a fine of up to 10 million. What this tells you is that the regulators are not playing around. They're not playing around. It's one of the biggest fines in regulatory history in Nigeria, like for things that are general, not things that are very unique. It's one of the biggest. It just tells you that the regulators are not playing around. They're not playing around. You not following up and ensuring that you do a data audit means that, if there's a loophole somewhere, you are likely not going to be able to see it. You're likely not going to be able to see it. So that's why the fine is very stringent. So again, you may be saying, oh, but we have not yet done up to 1,000 data subjects. That's fine. But next year you might. And do you want to wait until next year before you start actively having a conversation with a compliance expert that can start advising on how you go about it? Would you want to wait until next year? Would you want to wait until you're written a letter from the regulatory agency before you start taking action? So these are like some of the things we need to consider. When they write you a letter, you've already come onto their radar as someone that is not compliant. As someone that is not compliant. Even if you eventually decide to comply, they would now be coming back to be checking because you are someone that is not compliant, and they have to tell you before you took the necessary steps. So please bear that in mind. There is something very key that you have to do as part of your end of the year legal audit. So the last one I'm going to discuss before I go into some of the challenges and make recommendations, because I'm sure that the session is not supposed to last beyond an hour. So intellectual property protection. You have several things in your organization that form part of your intellectual property. Your trademark, that's your logo that you've registered as a mark that represents your business. Your copyright, that's the right in any literary, musical, and written material that you've created, for maybe commercial purposes or whatever. Once you create it, you have a copyright in that material, and you have the right to prevent any other person from, distributing your work without your permission, or using your work for a commercial benefits without your permission. Now, how somebody that owns a company is going to think around this is that they're supposed to, first off, have a register of intellectual property assets. They're supposed to have. Now, if you have a register of intellectual property assets, what it does is that it makes it easy for you to track how many intellectual property assets you have, which ones you're currently licensing out to someone else to use, and which ones are currently well protected. Because the key word here is actually protection, intellectual property protection. So you can protect your trademark by registering it, right? You can also register your copyright. But there are trademarks, there are intellectual properties assets that you may not really be able to register. Things like your trade secret, for example. You can't register your trade secret because there's no law for that in Nigeria to register a trade secret. But you can protect it leveraging things like non-compete clauses in a contract. You can protect it by leveraging things like IP assignment clauses in employment contracts for you and your team members, people that work with you. You can also use non-disclosure clauses in a contract to ensure that nobody that comes across your trade secret is able to discuss it or use it to create a commercial advantage for themselves, or use to create a commercial advantage. It's really useful to speak to an expert, like an intellectual property law expert or an IP compliance expert, right? An IP protection expert. It's really useful to do that. The reason for that is that there are several ways that you can leverage your intellectual property to make a lot of money, but you may not even know unless you have that conversation. Then secondly, there are some people that you've given your IP to use and do something. Maybe you were part of an event or something, you just send some of your intellectual property assets out across, and those people have now been using it in other places and benefiting themselves without offering any value to you in return, right? So the clauses of the contract that you sign with those vendors or those partners will also determine how they can use your IP without infringing on it, right? So that's why these things are very helpful. You need to huddle together. This is the end of the year, right? You're looking at trying to do an end of the year legal audit. Huddle together. What are our intellectual properties so far? How many of them have we licensed out to anybody? Which one can we even license out so we can leverage it to create more resources and, commercial advantage for our business, right? And then, what are some of the ways that we can improve the current existing contracts that we have so that the people that are engaging directly with our IP assets are not able to use them without our consent or without also providing a commercial benefit for us. So that's one of the things that you need to have in mind. What are some of the challenges of neglecting a legal audit? One of the main challenges is that you have complex and evolving tax laws. Why I say complex is because, one, prior to now, all the tax laws were in different laws. But now they're not trying to put a lot of the tax laws together in a comprehensive legal document that makes it easy for everybody to make reference to what their tax obligations are. But even at that, there are still a lot of laws. There's still a lot of tax laws. Like under the Startup Act, you have some tax advantages or incentives for being a label startup, right? But then the current tax, the ones that they just passed this year, they didn't make any reference to, that Startup Act of 2022. They didn't make any reference. So it means that they assume that you should be familiar with what's available to you. So that's why it's complex, right? That's why it's complex and it's evolving. That's why it's complex. FROS has now sent a directive saying that if you invest in a short-term investment instrument, they're now going to deduct a percentage, like once you get your own cut, that's your investment return, that they will also deduct something. So and there's so many directives. So it's difficult to keep track of which one applies. That's why, like I said earlier, it does make sense for you to consult a lawyer, a tax consultant, just so that you can be very clear about what your own legal obligations are with respect to those taxes. So it's very easy to misclassify yourself or underpay or not be sure. There are also some confusing concepts like withholding tax and VAT. For people that are not lawyers or experts in that regard, the tendency that you will misunderstand or think that, but we withheld something, when what you are withholding was not that particular one. The tendency to misunderstand is high, which is why you may need some support with that respect. So poor documentation could be one of the major challenges of neglecting your legal audit. Because if your company keeps poor financial, it can lead to disputes in the future. We've had clients that were doing a tax audit, and they're always, sometimes there's a lot of quarrel. This person is saying that, but I did this like this, and the tax man is saying, no, you didn't do it like this. Sometimes you even come and send your account statements, and every time they will just apply 7.5% on the total figure. You're not the one that will now come and start explaining, no, I can't do that. The VAT is meant to be on what created value. So what if I invested 50 million into my business? Are you going to collect VAT from money I invested? Of course not. That is not the basis of the tax, right? It's a value-added tax. So it is when value is added through the commercial process of creating value. That's when the tax is charged, right? So if I provided a service to someone provide a service. So value has exchanged hands. So that means that the VAT would apply because value has exchanged hands, right? But if you're the one investing in your business with your money so that you can explore, to see the commercial landscape, see if there's anything that could come out of it, then the VAT would not apply, right? But the point is that the proper documentation of this financial record, if you have an audited account statement that says, oh, on X date, 50 million was paid in to advance business operations, and on Y date, 20 million was made from client B, then 5 million was made from client X, and 1 million was made from client A, something like that. So that way, okay, so there's now a basis. And again, for companies, that's the best part for you. Companies are liable to pay the company income tax when they make profit. So if what you've made is losses, it doesn't matter if you've made revenue. If what you've made is largely losses, you're not going to be paying Company Income Tax Act on your losses. Do you get? So that means that you need to keep proper record so you can justify your deductibles. Oh, we paid over 20 million as salaries. It's deductible. It's an expense. I really hope that we're paying attention and that when you watch this or rewatch it, you will still be able to follow all the things I've been trying to explain. So you need to keep proper records so that you can know which ones are even the incentives that you are, that you have as a business owner, and also to know what are the deductibles that I am also entitled to under law. It's not a question of argument. It's under law. You have some entitlements, some deductibles that you're entitled, you're allowed to deduct, right? So the principle is if it is wholly, necessarily, and exclusively applied towards the business operation, so that's the basis for deduction. That's the basis. And once you're able to prove that you can deduct the expense. So in the previous tax laws, there was an allowance for deducting capital expenditure. It might still be present under the current laws, but you need to speak with a lawyer or a tax consultant to be able to have all these records clear. Sometimes asking for a memo or asking for an advisory call might be like one of the best ways to get something like that sorted. Then there's poor IP protection process. When you don't have relevant contracts that protect things like your trade secrets, it means that someone that works for your company can wake up and go and work for your competitor. It has happened before in the tech ecosystem. A big player poached some people from a major fintech, and then the fintech wanted to sue. They're not allowed to go and work there. They're not allowed to compete. And guess what? They didn't have a non-compete clause in the agreement. And this big fintech has enough money to hire the top law firms. It's just that people don't always take legal services as essential in Nigeria unless there's a problem. So don't fall into that trap because, like I said, the government stance on compliance is very bullish. So they are going to come after you. They're definitely going to come after you. So the best thing you can do for yourself is not wait until anybody starts chasing you, to start proactively preparing yourself to be compliant. That's the best stance that you can take as a business owner. So you need to protect your IP, right? So that someone that has worked for you does not go about sharing your trade secret with other people, because there was nothing to say that they should not be able to do that. You don't want someone that is working for you to be claiming that what they built while they were working for you does not belong to your organization. You don't want that. They use your resources, they use your laptop, they use your Wi-Fi, they use your office space to build a solution, and they are now saying they want to leave your company and go and work somewhere else. As far as the law is concerned, that product belongs to you, but it is easier if you just include it in your contract. So that's why it's good. Get a lawyer involved. If you've never gotten a lawyer involved before, since you began running your business, make 2026 the year that you get a lawyer involved. Your future business profit will thank you for it. So some recommendations: perform quarterly tax compliance checks. It just helps. Sometimes there might even be some deductibles that you're entitled to, because the new laws say that you're allowed to deduct an amount for rent, an amount of up to 500,000 naira. Norma is also aware of this. You're allowed to deduct that. But you may not even know, right? And you've been paying the taxes, but you do not even know. But if you know, you can go and say, I've not been able to get this deduction. It's meant to be a tax incentive. I've not gotten it. And it's your right, because it's the law. If they have the right to come and collect your money, you have the right to say that you should get what the law said you should get as well. So as your business expands, you may no longer be classified as a small company. You might become a big company, which means that your tax obligations would also increase. So you need to ensure that you are also on track with compliance, just so that you don't have any problem when those changes start happening. So ensuring that you have all the relevant details, like your tax identification number, all of that is very, very key. And then for big organizations that have up to 15 employees, there are even regulations like the Nigerian Pension Act that require you to start contributing to pension. Once they are up to 15, you have an obligation under the law. This one is not about whether you have the money. The law obligates you to start contributing to the pension. So those things are things you need to bear in mind. You really need to bear those things in mind. Don't wait until, because someone can sue you, and if they sue you, the National Industrial will find you guilty. You will pay damages. You might even end up paying more than you would have paid if you were just contributing for the pension. So do not wait for something like that. So let's take a scenario very quickly, just to underscore what we've been learning so far. So KK, the CEO of Abadope, by the way, I'm just concluding, like 3 minutes. So KK, the CEO of Abadope, has a team of 6 people, right? And he intends to hire 6 more people by next year. He intends to pay a salary to all of them. However, he's worried about legal compliance. How would you advise him? Now, if I were to advise this CEO, the first thing I would tell him is that whether or not they were 6 or 16, you are always liable to withhold payee to send to their state of residence, because that's the law. That's the law. You're meant to deduct a percentage of the salary as personal income tax. It's called payee, right? You're meant to deduct it and remit to the state government where the employee resides. So that applies irrespective of whether they are 6 or 16. Now, when they become 16 by next year, you will now become under an obligation by law to start paying a pension contribution. It will no longer be an option. You actively start paying pension contribution. It will no longer be an option, right? So that's what I will tell him. I will tell him to proactively start trying to put compliance in place, because once you increase and you now have a certain number, because the SMIDAN categorizes businesses not just according to how much they're making, but also according to the number of employees. So once you start getting to that 16, going to 20, you're no longer a small business, especially if you're doing over 100 million, right? You're no longer a small business. So that means that your tax obligation is also increasing. So you need to get a tax consultant and lawyers involved, because that means that you're paying company income tax, and you also have other taxes that you're also supposed to pay. So if you're paying them, have you gotten your tax clearance certificate, so that anytime something comes up, maybe you're bidding for a contract, you can easily present those documents of compliance that would allow you to be competitive in such bidding exercises. So that's how I would answer something like that. So I just is like a bit of explanation on resolving that scenario. Thank you so much for listening. Norma has turned on her video and turned it off again. I'm sure she did that to remind me that we are already outside of time. But we can take a question or two
Yes,
before we wrap up.
actually.
Yeah.
Well, first of all, thank you so much, Barrister Sita, for that insightful and very practical presentation and session. Personally, I learned a lot, and I'm sure that everyone else here that joined the call virtually also learned a lot. Now, there's a lot to unpack from what you've just said, and I'm sure our participants have gained clarity on several areas that are often either confusing or overlooked. In fact, we have some questions which I will just show on the screen. The first
Okay.
question, yeah. So it's like a it's like a bunch of questions, but it's all under one. Joy says, What is the simplest practical structure we can adopt to run an effective year-end legal audit without overcomplicating it? Very stunning question, actually.
Okay, please, can you repeat that, please?
Okay, the question says, what is the simplest practical structure we can
Mhm.
adopt to run an effective year-end legal audit without overcomplicating it?
Okay. I hear you. I hear how not overcomplicating it, but the thing is that running a business itself is complex because there are different things to account for. But I would say that a simple way to do it is to say things like IP. Just have like some subheadings of things you want to treat in the end of the year legal audit. It will also be nice if it's a bit informal. You sit down together, there's food and drinks, but you have your laptops open. Then everybody's looking at their Excel sheets. Okay. So what IP assets do we have? Right? So that's helpful. What IP assets do we have? Do we currently have that we can track that will help us to ensure that our IP assets are well protected going forward? Right? Then you can go over to corporate governance. Do we currently have a good corporate governance outlook for our organization? So there are several ways to answer a question like that. Do we have a constituted board? You know, who are members of the board? You know, who are members of the board? Have we been keeping resolutions? Like, do we have like documentations, a have we been keeping record of all the resolutions that have been made? You know, do we have like our board meetings pre-scheduled quarterly, or is it when things come up, maybe a problem has come up, we're now all coming together to meet? So all those little things are things that can make a significant difference in the overall outcome of the business. Because if you schedule it like every quarter on so date, maybe last Saturday, we are having our board meeting. So it's more like everybody prepares. If you're the one in charge of finance, you're running around because you know you'll be asked some questions at that board meeting. If you're the one in charge of legal, you're also running around. If you're the one in charge of marketing, you know, something like that, just so that it creates a lot of certainty around accountability. So then the third one, we mentioned IP assets, right? Asset management, corporate governance. Then the next one would be data protection. How have you managed the data protection so far? How many data, like how many data subjects do we currently manage in our existing infrastructure? The question is relevant because when you know how many people you're managing, then you can even predict how many it might likely be in the coming months, you know, given your current growth trajectory. You can't avoid it. Like the world is evolving. So you can't avoid something like that. You need to be compliant with data. And it also has a way of positioning you as more global when you have a very good data protection mechanism and structure, because it's a big concern globally. So if your company is also like ensuring that data is well protected, that you do regular audit, so it positions you as a more global organization because your standards are high. Norma, are you still here?
Of course, I'm still here.
Okay,
Thank you
so the
so much.
next one is taxes.
Okay.
Next one is taxes. I just wanted to mention 5 headings that they can think around it from. Next one is
No problem.
taxes. So what taxes have we paid this year? And what other taxes are we liable for? Right? So if you've not even been paying, that's also a problem because the taxes are there waiting. They will just check the dates that the company was registered. Yes, now. They will check it and they will multiply the tax and the penalties. So the earlier you go and pay, the better for you, because the taxes will keep multiplying, whether or not you like it. Some people want to hope that when I make it, I'll not have money to pay the taxes, but you don't know how much penalty you will have to pay eventually by the time you eventually make it, in quotes. So I think that that's like the fourth and very important one. Then the fifth one will now be general compliance, which covers permits, licenses, and things of that nature. So if you're running an organization in industry that requires you to have a license, that's the part to talk about it. Like that's the part to like explore, you know, which of the license should you even be looking at, and what's the process of going ahead to get such a license to ensure that your business is compliant. So that's how that's my thoughts on that.
Okay, that's wonderful. We have another question. The question actually is okay. Hold on. The question is a long one, so just buckle up. It says, "My second question, sir, is we just discovered this month that one of the biggest vendor contracts we have in our company expired in September, and the vendor has continued supplying services."
Wait.
Okay.
The vendor continues supplying service without a valid agreement.
Exactly. So, what practical steps should a business take when it realizes a key contract has expired but operations continued? And how should they prevent this in the coming year?
So answer the question in her own question, because she said without a valid agreement, which means that the problem there is the contract, the management of the contract. So I usually tell people that once your business grows, there's something called legal operations. So legal operation is the unit that controls everything compliance, everything data, everything corporate, everything IP. So the legal operation is important because you have your business operation, like we make a product, or we supply a particular service, or we're a software and people use us to make payments. So that's like the business, right? And there's a marketing, the marketing operation. How do we sell that product or service? Then there's the legal operations. How do we ensure that this business is compliant and that it remains a going concern without significant business risk? So that's legal operations. So I would say that contract management is an aspect of legal operations. If you've got a vendor that you're working with, one of the ways, again, for that particular scenario, if the vendor supplied in good faith and the company actually took delivery of the service, right, the company can come and say, we did not even know that our contract had expired. Maybe if the company doesn't want the services, it can have a conversation and find an amicable way to settle the issue, because usually relationships are also important in business, right? And then now say, okay, from next year, these are our standard service level agreements that we sign with all our vendors. So, or if it's a partnership agreement, depending on your structure and the way you want to do it. So if it's a partnership agreement, this is a standard one we sign with all the people that provide this type of service to us. So you then send them a copy. When you send them a copy of that contract, then after they've gone through it and signed, that contract will now govern the supply going forward. And again, the problem with contracts is that the contract can be just a document dusting off somewhere. But if you have like an Excel sheet, which is also why legal operation is so important, an Excel sheet that just says contract, right? Contract with Mr. A, validity 2 years, for example, right? Maybe the type of product is supplying or the major product or service person supplying. Then the Excel sheet will also have a column that says the amount, maybe the amount that you agreed to pay and the quantity of supply that the person has agreed to make. So what that just does is that even someone that is just an admin, right, that is not even the lawyer drafting the contract and going to court, the person can also have a sense of like, this is our contract trackers. So these are all the active vendors we have, and these are all the active agreements that we have with them. So that it's easier, like it's way easier going forward. Because if you have something like that, by now, you would have seen on your tracker that the contract had expired like some months back. So what you would have done is now live schedule a meeting. Oh, how far? That contract is expired. We've sent a new one. We are proposing the same terms. Maybe the economy has changed. The person might push back and say, pay an additional 500,000, something like that. And if you agreed, then you update the contract and you also update the sheet. So something like that. What I've told you now is premium solution. Don't worry.
That just goes to show how much value you're giving us and everyone paying attention here. So for that, we say a very, 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 very big thank you. There are at least two more questions, but we are already out of time. So for every other question, I will send it to you, Osita, and then you can help us answer it either in the comments or on LinkedIn, where if you guys are not already, following up with us and Black Crest, please do so, and do so today. As we close this session, the key takeaway is very clear. A year-end legal audit is not just a compliance exercise. It is a strategic opportunity because by reviewing your contract, tracking all your permits, licenses, the renewals you need to do, by updating your internal policies and aligning your legal operations and your legal framework with all the financial and operational goals, you position your business to step confidently into the new year. We've explored critical areas that can make or break your business's readiness, ensuring your contracts are current, ensuring your licenses are up to date, preparing your legal structure and your governance framework to support growth, investment, and other strategic partnerships, updating your internal documents from data compliance to insurance and to all the other permits you might need with the government regulators, anticipating regulatory changes in whether it's tax or data protection or even ESG, insurance, securities, banking, all of these different industries just to stay compliant and competitive. So basically, the point of an audit, especially a legal audit, is for clarity and control so that you can understand number one, where your business stands legally, you can mitigate any hidden risks that you see, and you can create a practical roadmap so that you can scale safely, whether it's nationally or whether you have decided to go international. Either way, a legal audit makes you 10,000 times more prepared and more proactive, like Osita rightly emphasized, to take on these business ventures and enterprises and your business goals, whatever they mean. So please, guys, thank you so much once again for tuning in. I know that we're over time, but please, this was so value packed. I didn't have the heart to tell Osita to stop because even I was learning a lot. You see, that's why it's also good to partner with people in your field because you get to learn like I have learned. So please step into 2026 with confidence, with clarity, and with control because a business that audits itself well is a business that thrives. Thank you so very much, guys. Ijama, over to you to conclude.
Okay. So thank you very much, Barista Noma, for the conclusion, and of course a very big thank you to Barista Osita James for breaking this topic down with so much clarity, depth, and practical insight. I mean, this session has not only simplified this legal and regulatory concept, but it has also given every founder and operator here a clearer sense of what they must prioritize before the end of 2025. And to everyone that joined us today, a very big thank you to you. Thank you for showing up. Thank you for engaging. Thank you for asking thoughtful questions. And thank you for choosing to invest in the legal health of your business because I'm certain that's what you're going to do after now. And webinars like this matter because of the communities like you. So a very big thank you to you. As a firm, we believe that knowledge is a competitive advantage and more educated, and the more educated our ecosystem is, the stronger and safer our startups would be or would grow. So before we close, I want to leave you with this. This is only the beginning. Today's session marks the final installment of our current series. That's the grand finale of our H2 2025. But by the first half of 2026, we are coming back with an even bigger, deeper, and more transformative lineup. One that blends corporate strategy, technology, governance, compliance, and the emerging trends shaping the next decade of business and innovation. So if you thought 2025, H2 2025 was valuable, if you thought this session was valuable, then just wait for H1 2026 because it's definitely going to raise the bar. Expect stronger teams, more expert-led conversations, more practical toolkits, more legal tech insights, and more opportunities to position your business for smarter growth. So stay close, stay connected, and stay ready because 2026 is going to be a defining year, and we're committed to walking this journey with you. Once again, thank you to our host, Barista Noma, and thank you very much to our speaker, Barista Osita James. And thank you to every participant. We appreciate your time, your engagement, and your trust. Have a wonderful evening, and we look forward to learning and growing with you again in the new year.
Thank you.
Yay!
Thank you, everyone.
All right, thank you so much, guys. Have a lovely, lovely weekend.
Yeah,
Bye.
you too.